Hi, and welcome back to the Heinz and Clark YouTube channel, podcast, Twitter sphere thing, whatever we do here. Today, we got a pretty interesting one. It's a topic that we talk about a fair amount with a lot of our clients, and a lot of times new clients. And it's the topic of, should I be an S-Corp, or when should I make that transition? We're going to talk, hopefully briefly today. Some of our videos end up going long, about the kind of the initial phase of making that decision. And I'll let Steve give a little of that agenda.
Yeah, and so everyone knows this is what our agenda today looks like.
Super formal.
Yes. You probably couldn't read this even if you were close up, because I wrote it. So John, our production guy here, marketing guy, is going to actually be putting this example into the video too, so you'll be seeing that here in a few minutes as we go through it.
He's going to use some technical things, or like some like a computer.
Yeah.
And so he won't be handwriting it.
Yeah. It will look much better than that one.
Technical things like a computer.
So this came up because of the time of the year during tax season here. We get a lot of new clients, as Aaron mentioned, or maybe clients who are making more money in their business than they were before, and they are subject to self-employment tax. Self-employment tax is essentially Social Security and Medicare. If you work a W-2 job, they withhold Social Security and Medicare from your paycheck. It comes to a combined 7.65%. Your employer also pays 7.65% on your behalf. If you're self-employed, you're lucky enough that you get to pay both sides of that. So that's
essentially the employer and the employee.
right. So that's 15.3% combined. So let's just say I'm going to round. This whole example is going to be using round numbers and not, exact numbers, if you will. But let's just say you pay a federal income tax rate of 5%, a state income tax rate of 25% for federal income tax, state income tax rate of 5%. Now you're paying 15.3% in self-employment tax. Now you're paying 45.3%. So of that income that you earn from that self-employed job, whether that could be like a consultant job, we have a lot of realtors in this situation. People who get 1099s are oftentimes in this situation. They're paying almost 50% of their income to the federal and state government on that. So
now, mind you, it is after they get to deduct business expenses against that, but their net essentially is getting hit at that 45.3%.
So let's say this example that I wrote up here that we're going to use is a single member LLC, so one person owner, maybe like a realtor as an example, and they made a net of expenses $100,000 in their business. So if they did nothing, they would file this on their personal tax return on a Schedule C, which is just a schedule that goes behind the 1040. You would report your revenue, your expenses, and you'd come with a net income. That income passes through or flows through to the main part of your tax return where these taxes are calculated. And you would pay those taxes that I had already discussed. The other option, which we would highly recommend in most situations, is that they elect to treat that LLC as an S-Corp. So I always get the question, well, now I'm going to be an S-Corp. What do I need to do? Well, legally, you're still staying as an LLC. The IRS just allows some flexibility in how that LLC is taxed. So you can choose to be taxed as an S-Corp. Making that election is very simple. We just elect it with the first tax return that you file. There's a form that we attach electronically to it when we e-file it. You sign a couple pages of it, and the election is complete. So let's use the example of a realtor or someone similar, 1099. Their net after expenses is $100,000. So in the example with the Schedule C, they're going to pay $15,000 in self-employment tax on this. So they would file with the S-Corp election, they would file a separate tax return. So the S-Corp is going to file its 1120S, a complete separate tax return, separate entity. It's going to look very similar, actually. You're going to report your revenues, your expenses, and you're going to come to a net income. The net income is still going to flow through to your personal tax return. So that S-Corp entity doesn't actually pay any tax associated with it, for the most part. There's a few other scenarios that we'll get into in a different video. But in this case, there's no tax, so all the income is flowing to the personal tax return. you're still paying the federal income tax and state income tax on that, but you're skipping the self-employment tax on those earnings. So if you were to skip all of that, that $100,000, if all of that is skipping the self-employment tax, you're going to save over $15,000 in taxes just by making that election. That seems like a no-brainer. There's always some caveats with everything associated with things like this. And so a couple of those that we're just going to touch on now, and I think we'll do a future video to talk more specifics on some of them, is one, the IRS obviously wants you to pay some of this self-employment tax or Social Security, Medicare.
The IRS looking for some of that?
So what the IRS, in a sense, wants you to do is they want you to pay yourself a salary or actually issue yourself a W-2 for the work that you do as like the employee of the business. So you're kind of splitting this income up into two parts. The work you're doing, as an employee producing the work, and then also the business owner that's making the profits off of the income. So let's again use that $100,000. We could maybe do a W-2 of roughly $40,000. That would leave roughly $60,000. Still, that's passing through, skipping the self-employment tax. So that tax savings is going to be somewhere around $9,000 to $10,000 after that. The $40,000 is not a hard number, if you will. The IRS wants you to pay yourself a reasonable compensation. They don't really define what's reasonable. They give you a list of factors to consider. I find that actually most of them don't really apply. There's usually a few that do. What type of work are you in? How new is the business? How profitable is the business? Those are usually the main ones. So with that W-2 and providing a payroll, you have to run payroll at least quarterly, which adds a little bit of additional administrative cost to this. The tax return itself is more expensive. It's a much more complex return, even though it looks very similar. Our software costs for it alone are significantly more than individual tax returns. So there are some extra fees associated with it. So that's where there becomes kind of a cost benefit of that income has to be above a certain level, and I think it's usually $30,000 to $40,000 is where we start to recommend this, where your tax savings is going to more than outweigh the additional fees that we would charge you for it.
Yeah, I think kind of the one I use is we do it in that 30 to 40 range. When we get to a net of 50, I kind of just tell a lot of our small business owners, like, you're at that point. The cost compared to what you're going to save, you're running like 2 to 3 times. So I talk about it in like a return on investment. You're going to get 3 times your money by doing this, and then I don't have to feel weird about suggesting something that has additional fees that, one of them, the 1120S is definitely going to be, if they go with us, going to be a fee through us. And but at that point, it just seems to make logical sense. At $100,000, it's a hard one to think why you wouldn't do it. Outside of maybe you really like the idea of Social Security when you retire, but number of options, number of different things that we can do to replace that through retirement and in areas where you're more in control of what that's doing. But that's probably a way later video than even the next one. This could be a long series of whatever, but that's just kind of a little jump into why you'd make the switch to an S-Corp. And
yeah, we do a lot of this time of the year. A lot of new clients will see on their previous return that maybe they had income in similar ranges and they didn't. And so that's always kind of a cool thing to be able to tell them that, well, maybe you overpaid in the past. We can save you, 10 grand in taxes this year. A lot of people have made estimate payments during the year, and so now all of a sudden they're getting pretty significant refunds. So, I think as we kind of touched on, we'll do another video or maybe more on related things related to payroll. Aaron mentioned retirement contributions. When you set up that S-Corp, there's a lot more variety in the type of retirement contributions that you can take and the maximums, and a lot of kind of additional tax planning things that we can start to take advantage of to save everyone some money. So,
well, cool. Yeah, if this is your first time here, hit the like and subscribe or whatever buttons that are positives. If there's any negative buttons, ignore those. And if you've been here before, keep coming back and hopefully either learning something new or getting more confident in what you already know. Already knew or already know, or however that's said. Cool. And check out our socials.
Socials.
Yeah, our socials. That's what the kids say.
We were told to say that.
Yeah, we get like a penny every time we say that. All right, see you guys.
Thanks.